So I'm going to talk today about payroll, more specifically about payroll tax withholdings and issues that we've been seeing now that we're kind of in the throes of tax season. Um, it's middle of February now, and so people have they're getting their W-2s and they're starting to ask questions and why is my withholding not the same as it used to be and what have you. So we filled some of those calls. Payroll has become a situation where there are payroll companies and payroll experts and providers through software packages like QuickBooks Online and Gusto and different things that Paychecks, all these different ones that have payroll figured out that kind of alleviate some of the burden and some of the monotony of running payrolls and doing things. Whether you're the business owner or you're a CPA firm like us, that's decided, look, we don't want to be in the payroll game any longer because it's just it's become such a commoditized piece of the business that there's really not a lot of value that we provide necessarily in the form of running the payroll. Although we do become the kind of the experts to help navigate payroll tax questions and as those come up. And so one of the things that's really become an issue a lot more lately is why I don't have any withholdings. An employee, comes to you and says my withholdings is really low and I don't understand this. And you don't know how to answer the question as the business owner, then you send them to their CPA, or maybe they don't have a CPA, or maybe they don't have a tax preparer that they use on a regular basis. And so the issue has become the W-4 form that is completed is not like it used to be. In the past, a few years ago, the W-4 form was set up such that you would put in your income, and then you'd put in the number of allowances that you might have on your tax return, because prior to 2018, an allowance on your tax return gave you a dependency exemption, and so that was calculated into the tax tables that the IRS published to be able to then figure out, based on your rate of pay, here's how much income tax needs to be withheld to cover the tax liability you're going to have at the end of the tax year. Well, what happens is with this new W-4 form, the idea is try to get to zero. And so the whole idea behind getting a big refund or owing money, the IRS doesn't want that. The taxing system that we are under is a pay-as-you-go system. What that means is we pay taxes or withholdings on our wages as we earn them to hopefully cover the tax liability we're going to have. Now, there's things that factor into this tax calculation, like marital status, single, head of household, married filing jointly, number of dependents you have in the form of children. There's child tax credits that have been expanded in the last couple of years, and so each child's worth about $2,000 in tax savings. It's just straight up tax credit. And then you've got expanded standard deductions. The individuals get nearly $13,000, and a married couple's $26,000. That's a lot of deduction that comes into play that the tax tables have figured out. And so what that means is, as you're getting paid throughout the year, if your income level, let's say you make $20,000 in wages, maybe it's a part-time job or your first job or whatever, and you've got a kid, well, and you're single. And I'm just going to use high-level math here and not really get into real numbers. But let's say you make $20,000 and you're single with one child, you're automatically going to get about a $14,000 standard deduction. So it's going to knock that down to, let's say $6,000 left of taxable income. And so it's going to put you in the 10% tax bracket, which, you may or may not have any taxable income associated with that once you kind of do the math on it. But so 10% of $6,000, and then you factor in a $2,000 child tax credit. If you have one child, you can clearly see you're going to be overpaid and not have any tax liability at all when it comes time to do your actual tax return. I mean, a $600 tax bill and a $2,000 credit. So the tax tables know this, and so they're not going to put any withholdings on your W-2 or on your pay stub throughout the year. And one thing that's terribly frustrating that I think needs to be communicated more to employees by employers is, the responsibility of the employee to actually look at their W-2 throughout the year. When you get paid, or I'm sorry, your pay stub throughout the year. When you get paid, you get a pay stub, and if it's not right, you raise your hand and say something right then, and not wait till February 15th or 14th or whatever it is, say my W-2's not right. So anyway, a little bit of a rant, a little bit of a thing that it's just kind of front of mind based on conversations we've been having today in our office. And so I just want to remind everyone, or remind um, business owners and or employees, that the responsibility is on you to understand your personal tax liability and what your W-4 should look like in order to put you in the best tax position that you've got. Yeah. So anyway, just want to share a little bit of thoughts around that. Maybe a little bit of a accountability to say, hey, take some responsibility. And if you get anything out of this, drop a comment. Please share the video. Subscribe. We're going to put a lot more content out, maybe a little bit more polished than what we're doing right now, but certainly want to get some information out, and hope everyone else has a good filing season. And we'll talk to you soon.